Hello guys, so this is Fuzzy. Yeah, Fuzzy Chords, Fuzzy FX. I do music and I do Forex. So very quickly guys, in this new video I'm going to show you exactly how to trade professionally using market sentiment. Okay, before I proceed, please kindly like this video and subscribe to my YouTube channel because I'll be dropping more dope contents. Contents that are going to really help you improve as a trader. So let's just jump right into this. So basically, we know 90% of traders lose money, and the reason why they lose money is not far-fetched. It's just basically because of majority of them don't really understand market sentiment. They just take their trades based off on maybe trend lines, something like this. They just see, okay, the market is trending down, let's look for sales. They see a break of structure. While that is absolutely good, but of course these are just common knowledge. I mean, these are just things that you just find everybody doing it, and that's the reason why we're having the high rate of unsuccessful traders, because 90% of traders are doing the same thing. So you want to be part of that 5%, that 10%, that small amount of traders that are doing something really different. Just want to have just that little edge above other traders. So basically, sentiment is actually going to show you what direction you should be trading. So you don't just want to come to your chart and just look for market structure like that, or technical analysis. You want to be sure of what direction you should be trading. So for example, somebody now would have tried to, you see a break of structure here, price went, obviously the market is in a heavy downtrend. Somebody now, how do you take advantage of this buy? How do you know that at this particular price level you should be a buyer? I mean, how do you do this? This is daily time frame. This is daily time frame. This bought for like a whole month. Like a whole month we're just in the bullish run. So how do you know what direction? So we want to be using market sentiment to do that. So this is stockchart.com. Stockchart.com. You could just type it on your browser. Just open stockchart.com. So we're going to be using a couple of economic indicators to really gauge sentiment. So one of the tools that I'm going to be using, this is just one of the many tools I use to gauge sentiment. So in stockchart.com I use ETF. So ETF is just exchange traded fund. So this ETF basically is just, it acts like, a stock market too. It's more like shares. So what they are doing is they're just trading. Just investors are putting money into these ETFs, just like the way they are putting money into stocks. So it just acts like a stock market. You get so. And so we use this ETF because investors are putting money inside, or they are they are investing their money in ETFs. It helps us to know when investors are putting money or when investors are not putting money. So basically it just helps us to understand risk sentiment. It helps us to understand what exactly is going on globally. So I use so for this strategy, basically we just want to be using the commodity ETF versus the S&P 500 ETF. So that means this stuff I'm doing here is just basically, it's called the spread chart. So I'm just doing a spread chart of these two. So I'm pairing the commodities against S&P. That's both are under ETFs, not under ETF futures, futures market, that kind of stuff. So when you come to stockchart.com, let me just show you how I do this stuff. So you just come to stockchart.com, you type CRBL.L. Oh, sorry. So you just type CRBL.L. Then you add this. Then you just type SPY. So SPY represent S&P on the futures market, on the ETF market. So it represents the S&P. So we want to be pairing commodities versus stocks. So when you press that, it just loads, and let's see what. So it gives us the exact same chart. So we just want to be doing one or two back testing. So I added just this moving average. This moving average is just to show us what is important in this price movement. So basically, we are trading, we are paying these commodities versus the stock. So if commodities are buying, because commodities and stocks actually move, they are inversely correlated. So if commodities is going up, we expect stock market to drop, and if stock market is going up, we expect commodities to drop. So we'll just do backtesting for what on price for this whole year, so 2021 to what we have now. So now we have the moving average. This blue moving average is the moving average 10, and this red moving average is the moving average 50. So we just want to we want to see price trading above this blue moving average or trading below. We don't want price to be trading in between these two moving averages. I mean, when you see price trading inside of these two moving averages, we don't want to see price around those levels, because when we see price at those levels, it shows us, it gives us should I say, a consolidation. Or most times the market has not really decided on what direction it wants to go. So once it breaks out of either the blue moving average or the red moving average, it gives us a direction of what we should look at. So if you look at January, you could see that the year started with a buy move on the commodities. So the commodities were actually bullish, and in that same month we saw this bearish movement again. So back and forth movement just inside of this blue and this red moving average. So it just shows that in the month of January there was just a small, there was not much movement here. The back and forth movement of price touching the blue and the red moving average just so many times, and it just gives us that there's a consolidation around this zone. And look at in February, we could see momentum coming to the market. We could see that the commodities were actually stronger than the stocks. So you could see that commodities were stronger than stocks, and that's why you see that we could see this buy here. Then somewhere around March, we could see that decline. Then we could see the decline again. So that this decline means that stocks were stronger than commodities. So let's just go to the chart to just look at this, what I'm showing you here, and let's look at the relationship to what we have in the chart. So basically, the stocks is going to represent, it's going to stand in for the US, because this is S&P 500, which is a very it's one of the most traded stock market in the US. So this is the US stocks, and this is commodities basically represents, should I say, virtually all the commodity assets, so ranging from copper to soya bean to corn and all of those stuff. So now Australian dollars is actually a commodity currency. So if you want to know about commodity currencies, you could just do your research about commodity currencies versus the dollar. So this is 2021. So basically, we could see in January what I told you. I said the market was hitting the red and blue moving average line back and forth. So because of that, we were not expecting much movement on price, because we've not seen that clean movement yet. So if we see in the month of January, you can see that price was just ranging all through, and we could see the range. Then in the month of February here, you could see the bullish move that came into the market. So it came into the market because in the month of February here as well, you could see that momentum started coming into the market. So imagine you trying to trade sales at this point, at this month. Imagine you just knowing that, man, I'm supposed to be a buyer because commodities are gaining strength, and you just started buying Australian dollars against USD or against other pairs. I mean, you would have been on this old bullish move for a month. Look at this clean move. You just been a buyer. And if you look at the month of March, you could see the decline. The market started dropping. Commodities started dropping against stocks. So stock market was gaining strength against commodities. So it means commodity currencies will start dropping. Then high yield or should I say equities market generally will start buying. So that's why we had this decline here. And look at this. Australian dollar started dropping. In the month of March, you could see that it started dropping against the dollar. And so what happened in the month of April? So April, started seeing this rally here. So price started to rally again. In the month of April, we had this rally just from this blue moving average line. Price rallied, broke the red line, and boom, trading up. So what happened? So if you look at this in your chart, you could see that Australian dollar started going up, and so that's why we had this whole bullish movement. Now if you look at, we started seeing this bearish in the month of May. We started seeing one or two bearish movements. Price started trading lower in the month of May. Then as you could see also in the month of June as well, price was actually ranging. Price was not really moving very well. You could see that price was just hitting the blue moving average line, just coming inside, going outside, just like a range. So all through this time here, we should expect a level of consolidation in the market, because we are waiting for a clean breakout in any of these moving average lines. So we had this clean breakout here at first, then price traded. We had this clean breakout here, then later price traded inside again, and price did not really push all through. So that's the month of June to July. We're having this whole consolidation. Then the month of August as well, price started, price broke out clearly here. It broke out, and price just stayed below this level for a while in the month of August. So basically, what that means for us is we want to see a range in the month of June to July. So let's look at the chart. So what happened? So let's just check. Let's check through. Let's see what happened. So in the month of May, after price traded higher, you will see that price started to range in the month of June. Price was ranging all through. Then towards the ending of June, we had this sell off here. Price sold off. That's sold off from June to July. During the month of July, what was happening in July? So this is July. You could see that price traded lower here. Price was just basically ranging all through. So, and this was happening because of the Delta variant case of COVID. That's the COVID Delta variant news and everything. So investors were very skeptical. They are like, what, we don't know what's going to happen next. And because of uncertainty, that's risk aversion. So because of there was not enough appetite for risk, that's why we are in this consolidation. A lot of people were expecting a lot of stuffs like the Fed. We're expecting Fed to start tapering on interest rate, and all of those stuff still added to the reason why we're having this whole level of consolidation. But of course, because of market expectation that US dollars is going to gain strength, or interest rate is going to go up, because of market expectation, that's why you saw that dollar started gaining strength. So let's see the decline here, and price started dropping. And in the month of September, so price dropped till August. So what happened in the month of August? So August, price started trading lower. You can see price was trading lower here. Price was basically more in this direction, in this bearish direction here. So there alone, you can see that movement here as well. So imagine you just knowing what direction you should be trading. Now, I'm not saying what I'm showing you here is not something that you want to base your idea on a 1 minute time frame, or on a short time frame. You want to be using higher time frames like the 4 hours daily time frame, the 1 hour time frame. You don't want to be trading anything below that, because these stuffs are stuffs that are long-term stuffs. You could see that I'm measuring it on a month-to-month basis. So imagine if you understand what direction you should be trading for that month, it just makes your trading a lot more easier. I don't know if you understand what I'm trying to say. So in the month of September, we could see the rally. We could see this clean rally. Commodity currencies rallied in the whole of September. So what does that imply to us? That's why we had this buy, this buys here in September. Price bought and price came back down again for a retest. Retested again, and boom, price started buying. So while other traders were looking for sales, or were focusing on selling at this time, because we saw that commodities were gaining strength, so we just understood that we just know what we're supposed to be doing. And currently where we are now, commodities are dropping. So commodity prices are dropping. That's in the month of October into the month of November. Commodities are dropping, and that's why we are seeing this bearish drop here on the Australian dollars versus the USD. Do this backtesting. Use this stuff on intraday or your slower time frame. Try and just see how you could just get a lot of entries from this strategy. Cheers and God bless.